Welcome back to the channel. Like always, my name is Jose Najarro and I am a self-taught investor looking for new investments to grow my long-term portfolio. I'm very excited about today's episode. Today we are going to take a look at 3 stocks that I bought into my portfolio this week. Like many of you, I put money to work into my portfolio every single week. So every single week, I want to find investments to overall do better returns than the overall market and give me great returns in the upcoming years. But before we start, make sure to smash that like button. It helps so much with the YouTube algorithm and I truly appreciate it. Also, on the description and on the pinned comment, you should see a link to my Discord channel. It's free to anybody that wants to join. I post every time I buy and sell there. And also, we have over 1,000 members. It's a great community for you to come in. Like I mentioned, it's free to anybody that wants to join. Also, you should see a link to Webull down there. If you sign up following that link and deposit $100, we both get a free stock. Sometimes they do a special where they do multiple stocks, and that's the best type of returns right now. All right, so the first stock I bought was Nvda, ticker NVDA. Right now, this has a market cap of $328 billion. Year to date is up 121%. So congratulations to all the long-term investors in the past year. And right now, it is down about 9% from its all-time highs. We've seen a nice pullback. We saw a pullback here in September. We're also seeing a nice pullback here in November, early November as well. So it seems like the earlier of the month seems to hit the high. I wonder if it's going to happen again this December. For those that are not familiar with Nvidia, this is pretty much the maker of graphics, of GPUs. And GPUs are used for pretty much everything from gaming, data centers, artificial intelligence, machine learning, autonomous vehicles. They're used for so many platforms that this pretty much, I want to say this is one of the few technologies that really take over or pretty much run the world at the moment. So let's take a quick look at the charts for Nvidia. The first thing I want to take a look at is it overextended from its current price. Right now, it's sitting at the price of $530. We can see it is not overextended. It's sitting around the moving averages that I normally follow. The second thing I want to see is their volume within the stock price right now. There is plenty of volume. We see a lot of volume compared to this range right here. A lot of volume between this range of 488 and 574. So within this $1 price range, we're seeing a lot of investors buying in. It means we're seeing a nice step ladder holding on here. So that again is going to provide probably great support in that 480 levels. So I'm happy to see this right now. Again, I'm more of a long-term investment. So technicals play almost the last step I look at, but I do believe they're still important to some extent. Let's take a look at some of Nvidia's most recent news. They reported earnings not too long ago, November 18th. And if you guys want to check out that video, feel free. I do plenty of videos. I do fundamental analysis on all these. Nvidia right now has $4.73 billion of revenue of their quarter 3 of 2020. It was up 57% compared to same time last year. Their gaming revenue was up 37%. Their data center revenue was up 162% compared to same times last year. Their guidance also tops estimates for quarter 4. So it's looking like a great place for Nvidia right now. Other great things, for those that don't know, Nvidia is also running a gaming cloud platform, which I think is pretty impressive. And cloud gaming market is one of the markets I'm very bullish on. And here in this cloud gaming market, what it is you pay Nvidia a $5 monthly subscription. And with that $5 monthly subscription, all you need is a place where you can have internet, either be in your phone, either be in your computer. It could be a computer that costs $100. As long as you have great internet, you kind of stream on their servers, which have these high-powered computers, and you can play all these amazing games with such a cheap laptop, or even through your phone. You're playing AAA games, and I do believe this is a service that it's not going to make much revenue for Nvidia right now, but it's one that can be a game changer in the upcoming years. They are now adding Fortnite into that service, and that's going to be pretty amazing because all these Apple users right now are unable to really download Fortnite through their applications through this whole Epic Gaming and Apple dispute that's going on. So I do believe this is going to add more members to go into Nvidia's GeForce Now streaming services, and that's a nice amount of revenue coming in. Next, let's take a look at some price updates. So on November 19th, about a week ago, we saw some big banks give some price performance. They're giving them price performance. One originally was $550. They moved that up to $600. Cohen gave it an outperform and raised his price target to $540 from to $600, up from $540. So this is the price that they expect to see in the next 12 months. So now let's take a look at some fundamental numbers for Nvidia. Nvidia right now is both expecting super revenue growth, 14.5% annually on average revenue growth. This is a super growth stock, and it's also expecting to grow its revenue 18.1%. Anything growing over about 15%, I consider a true growth stock. So this is 14.5. We're almost right there. We're at the borderline. Other things we're seeing is this company is positive on earnings, so it is profitable, and it has positive cash flow from operations. That means from its everyday activities, it's already making money. Next, if we take a look at the financial health for Nvidia, we're going to see it's looking pretty strong. They have about $10.1 billion of cash, and they have about $7 billion of debt. So they have more cash than debt. But remember, they are profitable, and they're also very, very positive on cash flow from operations. So it's okay for them to, even if they had more debt, I would be okay with it just because the overall business is running right now. So what are my quick thoughts on Nvidia? Obviously, right now, Nvidia is in markets I'm completely bullish. Gaming, data center, artificial intelligence, and it's also in that autonomous realm, which is not making much revenue right now, but it is one that can continue to grow as the years progress. Second thing, they have a super strong balance sheet. One of my favorite, not one of my favorite balance sheets, but it's definitely a balance sheet I would not worry about. If, for example, I think about it, if I had a company like this, if I had this company right now, if I was the manager, would I be able to sleep at night having this form of balance sheet? And the question is, yes, this is a balance sheet I would not worry about. It's seeing strong growth. It's very profitable at the moment, and it has positive cash flow from operations. The final thing is we're also seeing strong acquisitions with companies that Nvidia is doing. They're just in the process of buying the ARM company right now, and they just bought Mellanox a few quarters ago that overall increases their data center platform and their artificial intelligence platform, which is great markets for the upcoming disruptive technology that is coming in the next few years. We also saw it wasn't overextended from its stock price. One of my major risks, obviously, for most of these companies right now is how overextended they might be from their 200 moving average. Again, that's as a long-term investor, sometimes I don't worry too much about that. It's mainly since I dollar cost average, but it is something to understand. It's out there. The second company I bought is Teladoc. And before we take a look at stock number 2, guys, make sure to check out my second channel, Jose Najarro Entrepreneur, where I drop new videos every Friday, Sundays, and Wednesdays, and pretty much talk about ways to make money outside the stock market. I've been doing this for the past 7 years, learning about the market, learning of ways to overall become more successful and become financially free in the future. So make sure to check out that channel, Jose Najarro Entrepreneur. Thank you for the support. I truly appreciate it. And also, a second way to support the channel is checking out the merch, Self-Taught Investor. I'm pretty sure most of you guys are like me, doing this self-taught, learning every single day. So this is the perfect merch. Ticker TDOC right now, year to date, has also done amazing to investors, 136% from the beginning of the year, sitting at about $28.48 billion of market cap right now, and it is down about 21% from its all-time highs. I've actually been talking about Teladoc two companies I've been adding a nice amount here and there are Teladoc and Autodesk, two that I believe are gonna continue to grow as the years progress. So let's take a look at Teladoc's charts. So Tdoc right now, we can see it has pulled back a lot from its all-time highs. And first thing, are we seeing, is it overextended? The answer is it is no, it is not overextended. It is around its moving averages. The second thing is there volume within that price range it's at right now? We can see there is a nice amount of volume here within this $168 and $223. So that tells me there are plenty of investors buying at this portion, giving us a nice amount of support level. And what's one thing that happens, right? We saw that at the beginning of this year, the company begins to overextend and just go up in stock price. Then what ends up happening, this is what we end up seeing afterwards. We start seeing some consolation, just sitting around these price range for some times, just waiting for the next move. One doesn't know how long this move is going to take or when it will start, but right now it seems like investors are just loading up. You can see it here, right? This huge amount of volume here. Investors were just loading up for a few years, and then look, the stock price just rises dramatically. And this is the patience games. This is the thing about long-term investment. And sometimes it is boring, right? It's boring to see things like this where you have to wait, but I'm here for the 5-year games. So even right now, I still believe it is a great time to buy. So let's take a look at their earnings. Their earnings were on October 28th for Q3. Revenue was up 110% compared to the same time last year. US paid visits were up 148%. Total US paid memberships were up 47% compared to the same time last year. Huge growth all around. If we take a look at their expected revenue growth, Tdoc is expected to grow 33.3% on average annually for the next 3 years. This is a super growth stock right now. It's also expected to grow its earnings at crazy levels. We can see this revenue growth right here. One thing is Teladoc, it is cash flow from operations positive right now, so it is making money from its everyday activities. In this upcoming quarter, it seems like it might be negative. This might just be some overall expenses, but overall throughout the years, it seems like it is profitable from its cash flow from operations. Right now, it is not profitable on GAAP earnings, but it is expected to be there by the next 3 years. So it is making money from its everyday activities. It is not profitable though, so we have to make sure that they have a strong balance sheet. If we take a look at their balance sheet, they have about $1.2 billion in cash and short-term investments and about $1 billion in debt. Not the strongest balance sheet, but at least if their cash flow from operations positive right now, it is okay for them to almost have a 1-to-1 ratio. Obviously, I would prefer a stronger cash position right now, but again, I put myself in that mindset. Is this a company with a balance sheet like this that would allow me to sleep if I own this company right now? The answer is yes, especially with that type of revenue growth we're seeing and the overall the way the market is trending. So Teladoc, what do I like? I like overall the market is in. Obviously, I'm one of those users that one of those patients that prefer to do things online. I hate going to the doctors. I feel like it's a waste of time for me to go talk to my doctor. If I can do most of the stuff online and just go through a televisit, I think it's such a huge improvement for my time. The other thing, we see strong revenue growth. We're seeing strong earnings growth in the past quarter. We're also seeing a decent balance sheet, not the strongest balance sheet. That's something I might put in the what's not so good about it. Another thing we're seeing that's good is it's not overextended from its moving average. It's definitely consolidating in that price range. And the major thing I want to say is the thing I don't like the most is right now it is not profitable, and just the overall competition that can come into this market and other ways that doctors can do televisits outside of Teladoc. The final stock we are going to take a look is Activision in the gaming industry, one of my favorite markets right now. And before we take a look at the third stock, make sure to go to 7investing.com where they recommend 7 stocks every month for $7 a month. If you use my link or my promo code Jose, J-O-S-E, you get $10 off the first month. And may I say, yes, this is an affiliate program, but I would recommend their services to anyone. And December is coming up, so they're about to give their new fresh ideas in the next few days. So make sure to check them out. This is ticker ATVI, currently sitting at $78.14. It is up about 33% from its all-time highs. This is insane. 33% is great returns. I mean, the market on average doubles every 7 years. Now, if we take a look, it is down 10% from its all-time highs. And that was that pullback from August, actually. It's been pulling back from some time. We can see it is consolidating around this price, but let's take a look at the charts in a bit. Right now, it has a market cap of $60.39 billion. This is actually the price we see most gaming companies right now. First thing we're looking, is it overextended? The answer is no, it is not overextended. It is sitting next to its moving averages right now. The second thing, is there volume within that price range it's at right now? And yes, I can see a strong support here at about $73.85. That would be a great price for me to add in. Like always, right? I put money to work on a weekly basis, so sometimes I might not be able to pick up at those prices just because I don't have that money into my account at that day. But right now, I still believe it's a great entry. We see a lot of volume within this price range right now, consolidating a lot. Let's take a look at their most recent earnings, which were October 29th. They topped profit expectations and they raised their full year outlook for the upcoming quarter. A few things, they did see a decline in users compared to the previous quarters. But remember, the previous quarter too was the most affected by COVID-19. A lot more people were at home. A lot of people were without jobs. So a lot of people were gaming. So it's understandable to see that decline of users. And one should have understand that when investing in this company previously, right? This is not a shocker to me. I understand that, hey, during that time, a lot of people were getting added into gaming, but when things started to open back up, we were going to see a decrease. Net bookings were $1.77 billion, up 46% compared to the same time last year, and it's overall better than 4% than the overall consensus. Next thing, I want to show you guys how the overall gaming market is growing. Newzoo, which is this pretty cool gaming research firm, said that for 2020, global game markets grew 19.6% in 2020. China and the United States still remain the two biggest game markets, which make up almost 50% of the world's games market in terms of consumer generated revenue. That's why I'm so bullish in these two markets in the gaming industry. If you guys know, one of my tier 1 stocks is Huya and Tencent, both Chinese companies in the gaming industry, and this is the reason, right? You can see those two countries make up 50% of the total revenue. Next, mobile gaming. Another market that I'm very bullish in inside the gaming industry itself is mobile gaming. Mobile gaming is both the largest segment by revenue growth, representing 49% of the global market's revenue. This is insane. So this is why when I'm looking at these gaming companies, I'm really focused on the type of IP they have, intellectual property, and how they can focus and move that into the gaming market. So Activision is doing amazing. They're doing it with Hearthstone. They have Hearthstone on mobile, they have the Call of Duty mobile, and they're releasing the new Diablo 4 mobile. You can see, for example, mobile gaming is growing dramatically compared to game consoles, which are growing 21% year to year. PC games are only growing 6.2% year to year. So we can see the mobile gaming industry is definitely the future for gaming. Other things we saw, October video game sales were up 14% compared to the same time last year. Right now, with the new generation coming out, we have the Call of Duty for these new generation games from Activision. Another thing I wanted to show you guys are some of the top 10 games in response to new game launches with dollar sales charts. The first one is FIFA 21. This is from EA Games. Number 2 comes in with Watch Dogs. This is Ubisoft. Number 3 is NHL, which is EA Games. Number 4, number 5, number 6, number 7, number 8 are all Nintendo games. Then number 8 actually comes up with Star Wars Squadron, which is EA. Number 9 and number 10 are 2 Activision games, Modern Warfare and Crash Bandicoot. So these are the gaming companies I am very interested. EA Games, Ubisoft, Nintendo, and Activision. All companies I have talked about in this channel before. Next, let's take a look at Activision's future growth. Future growth for Activision is expected to be pretty low, 3.4%. So you might be wondering, Jose, why are you investing in this market with such small growth? I do believe analysts are a little bit underestimating the type of growth that these gaming companies are going to see with the move of mobile gaming industry. Am I saying I'm smarter than the analysts? No, I'm just saying they might be overlooking something right now. Next, we can see Activision is profitable. It's been profitable for many years, and it is positive from cash flow from operations. This is a money-making machine. If we take a look at their balance sheet, they have about $7.6 billion of cash and about $3.3 billion on debt. Again, this is a very strong balance sheet. This is one that I would not even have a second look at because it's so strong. So what am I liking about Activision? The market it's in, the future in mobile gaming, which we're seeing is strong revenue growth. The balance sheet is super strong. It is profitable, and it is very, very positive on cash flow from operations. My biggest downside right now with Activision is just the overall growth that analysts are not seeing. So this is obviously, it's not a hyper growth stock like the other ones I took a look at. But again, these are 3 markets I'm very, very bullish on. I might have a lot of positions in my portfolio, but I'm only invested in certain markets, and that alone has done me to overall destroy the market in forms of returns. So I hope you guys enjoyed today's episode. Like always, make sure to subscribe. Don't forget to hit the thumbs up, and don't forget to